GST, or Goods and Services Tax, is a type of tax that you pay when you buy things like goods, like clothes or electronics, or services, like going to the movies or getting your hair cut. It's a single tax that replaces lots of other taxes, making things simpler. Different items have different tax rates. The idea is to make it fairer and more straightforward for everyone, from businesses to consumers. So, when you buy something, a part of the money you pay goes to the government as GST. GST simplifies taxes by combining different taxes into one, making it easier to understand and manage for both businesses and consumers alike. In India, eligibility for GST registration hinges on varying turnover thresholds based on the nature of supply and location. For supply of goods in a normal state, the threshold is 40 lakh rupees, while it's 20 lakh rupees supply of goods or services in a normal state, and 20 lakh or 10 lakh for supply of goods in a specific state. Businesses exceeding these thresholds are required to register for GST. These thresholds aim to streamline taxation and ensure compliance. Referencing specific turnover amounts, India's GST framework simplifies registration requirements, promoting transparency and ease of doing business. These thresholds facilitate a fair and balanced tax system, ensuring that businesses contribute proportionately to government revenue while minimizing the burden on smaller enterprises. By delineating clear eligibility criteria, India's GST framework fosters a transparent and efficient taxation environment conducive to economic growth and development. Big businesses must pay some GST tax in cash. A new rule says that if a business sells a lot, more than 50 lakh monthly, they must pay at least 1% of their tax bill in cash. This helps keep things fair and stops people from avoiding taxes. The government wants to make sure everyone pays their fair share of taxes. This rule is a reminder for big businesses to follow the tax rules carefully. It's important for businesses to understand and follow these changes to avoid any problems. What are the penalties under GST? IZQ under Section 125 of the CGST Act. If anyone breaks the rules of the Act or its related regulations and no specific penalty is mentioned, they could face a penalty of up to 25,000. This penalty serves as a deterrent against violating GST laws and ensures compliance with tax regulations. It's essential for businesses and individuals to understand these penalties to avoid any legal consequences and maintain good tax practices. Businesses can avoid GST penalties by maintaining detailed records, paying GST on time, and consistently filing returns. Seeking expert advice aids in navigating complex tax rules, ensuring compliance, and mitigating penalties. Vigilance and staying informed about changing tax laws are crucial for businesses. Proactive measures uphold tax responsibilities, fostering transparency and accountability. This approach not only prevents penalties but also cultivates a culture of responsible tax management. By prioritizing these practices, businesses can navigate the complexities of GST effectively, ensuring smooth operations within the regulatory framework. At India Advocacy, we are committed to facilitating your journey through GST compliance. Our experienced team ensures that you navigate the intricacies of GST regulations smoothly. Let us simplify the process for you, ensuring that you meet all GST requirements seamlessly.